Good morning, everybody. Thank you for joining us, and compliments of the season to you all. Today we have to my right Liz Coe, and to my left Diana Crossan, who I think you all know, and Martin Hawes is down there in Christchurch. You'll see his beaming face looking out at us.
Hi there.
Great stuff. Today's just fairly, we're coming to the end of a long year, so we thought as a team we'd perhaps share some comments with you about pretty much the last 2 years. In money speak, but in human speak at the same time. So today's pretty relaxed, pretty conversational. I hope that we can share some thoughts and observations of what's happened in the past that'll be useful to us when we're thinking about the future. As you know, Martin and Liz are financial advisors. In that context, I'll need to provide some disclosures. So can I ask you both, when you do start to respond to some questions, you advise your disclosures first. Here's a useful place to start. We thought we might start with what is arguably the biggest innovation in New Zealand financial services in the last 2 or 3 decades. I'm sure you can guess what it is. Might just start to give that some context, a small story. Take you back to 2007. I was working for AXA in those days. It was a French insurer. I had the job of, building our first KiwiSaver plan for New Zealand. That was the year Michael Cullen announced to New Zealand Financial Services that we all could be, if you like, licensed by the Reserve Bank to offer KiwiSaver in New Zealand. His great big idea that's transformed us. We were pretty excited by that. Sir Michael was less excited. He felt that AXA, because it was owned by French, which it was owned by the French in those days. At that time, it was the largest fund manager in New Zealand, but he was worried that effectively the administration of KiwiSaver might pass outside of New Zealand. So he wasn't very keen on licensing AXA at all. So that was lots of consternation with us. There was lots of chat between the government of New Zealand and the government of France, back and forward, and so on and so forth. And eventually, it ended up with attending a meeting at the Beehive. My big boss from Australia came over. He was obviously a Frenchman. He just came for the day, as they do. And we waited for Sir Michael Cullen, who was due to see us at 11:30 a.m. His lovely secretary, I remember her very well, was very apologetic. He's a busy man and his schedule changes. So we were still there at 12:30 and at 1:30. And at 2 o'clock, my French boss just got the hump. He went back to the airport, went home. He went back to Sydney. I stayed until about 6 o'clock and didn't get a chance to see Michael. So went back the next day. It was a bit of a shorter day after 5 hours. We finally got the chance to go and see him. We entered his office. I rang my boss in Sydney, who, as you can imagine, was not available. So fairly testing time. Anyway, we made our pitch to explain that AXA in New Zealand was about as Kiwi as it can be. And at the same time, and it was just pure accident, through one of the AXA subsidiaries in Switzerland, it turned out that we actually reinsured the actual Treaty of Waitangi to Papa. So that was a big part of the pitch. Long story short, Sir Michael Cullen said yes. A whole bunch of conditions, but he said yes. But very clear thinking and a wonderful man. Who would have thought 9 years later he would join the board of the Lifetime Retirement Income Business? Diana, I might pass to you for your recollections of Sir Michael. You worked with him extensively, I think.
I did indeed. I was working on a program to develop a saving scheme for children. And it was at the time when interest on student loans was high. And a businessman in Auckland was concerned that this was going to be one of New Zealand's biggest issues, because only rich kids could go to tertiary study. And he wanted us to look at how we could change that. So we worked with the government, worked with Sir Michael and Trevor Mallard and Steve Mahari and others, and with lots of people in the private sector to develop a savings scheme for children. However, you will recall that Helen Clark decided to take the interest off student loans, and that changed. But it didn't change Sir Michael. He started thinking about this KiwiSaver. He was thinking about it already, and invited me I had just become the Retirement Commissioner as well, to join a group of 8 people to develop KiwiSaver. He said at the time when he first met with us, I don't want you to tell me we're not going to do it, because we are. What I want you to do is tell us how to do it. So we worked closely with Sir Michael. So it was a delight when he came on the the Lifetime Retirement Income Board, because it was a great transition from a children's savings scheme, which we looked seriously at, to a national savings scheme for first home and retirement, to how do you manage your money in retirement like Lifetime. So it was a very good transition. So it was very sad for us all on the board when Sir Michael died. He was an amazing Kiwi. We miss him a lot.
We do indeed. His vision for KiwiSaver was very clear, and his long-run vision for people being able to use that store of value to support their income retirement, but was something he just deeply believed. He made a great contribution to him. We do miss him greatly. Martin, you're on the board with Sir Michael as well.
Yeah.
Might have your own observations.
Yeah, well, the thing that that really strikes me about the story you told, Ralph, was this is a man who left people outside the eyes. He's a very polite man. He was probably a little bit shy, to be honest, but there were people who had come to see him for an appointment at 11:30 who got left outside the office for 5 or 6 hours. Now, somebody like Sir Michael wouldn't have done that if he didn't have to. And it just, what that speaks volumes to me is just how hard he worked. His life must have been, yeah, for a decade or two, just absolutely frantic. And you know, the next day you come back and he's still, and he wouldn't like this. I know that he wouldn't like this. He left, you know, he had to leave people out there because there were other more urgent things happening. Can you imagine living like that day? I mean, I've been busy in my life. 20 odd years I was pretty busy. But nothing like that, day after day, just relentlessly busy. And yeah, I was, you know, I felt that I was only really getting to know Sir Michael properly when he told the board in a very matter-of-fact way that he just had a diagnosis of stage 4 lung cancer. And I mean,
yeah, I did.
And no plea for sympathy or anything like that. I think he was truly a great New Zealander.
Indeed. Thank you. Why don't we sort of move to some reflections of the last 18 months and how they might help us think about retirement income in the next 18. Take my mind back to the very original days of COVID emerging in the world, March 2020. I think the US stock market, you know, the S&P 500 as it's called, fell almost 37% in a couple of days. By August, it recovered 27%. And it's back over 100% from what it was. That's really extreme volatility. That must be one for you, Martin. What do you think?
Yeah, well, it goes to say there's no rule book. You know, there's a guidebook. I'm a mountaineer, and we have guidebooks, and the guidebooks are always saying you've got to apply this, what we're telling you where the route is, according to conditions, because the crevasses might be open or they might be closed, or there may be a big shrund at the bottom of that ridge that you can't get over, and you have to make it up. It's only a guide. It's not a set of rules, because when the S&P 500 and the New Zealand market followed on pretty quickly, collapsed 37%, I said repeatedly that this was the first wave, there would be ongoing waves, and that we were in for a lot of trouble. I never for a moment thought it would bounce and away it would go. And we've had some of the best returns in the last 18 months or so that markets ever had. The way forward, though, Ralph, is no less tricky. You know, we've got this really big thing at the moment. On the one hand, people saying we're going to have a lot of inflation, and therefore central banks, central banks around the world are going to have to tighten things down and force us into probably recession, push interest rates very high to get rid of this inflation. On the other hand, we've got people saying, no, it's only COVID related. Once we get the shipping sorted out, it'll be fine. And it's a real battle going on, and that's to navigate through that is really, really tricky, because One of the things I've learned over 30 or 40 years, nearly 50 years, in investing is that you never quite know how it will play out. You know, certainty in this, nobody's got a monopoly on being able to predict the future. And that says to me that you've got to have a little bit of every different asset class, because each different asset class performs differently in a different economic environment. So for my portfolio, it doesn't matter too much whether we get high inflation and therefore a bit of a crash landing, or we get, you know, inflation settles down and we get a nice soft landing, because I've got different asset classes to manage those different scenarios. And I think, you know, I think that's what you've got to be. And I keep saying it, God, I'm boring, I know, but it's a diversified portfolio.
Not boring at all, Martin, important. For our customers in retirement, we have a saying here at Lifetime that we've got to try and take the worries away, and volatility just increases worries. It's just damaging for all our good people. It looks as though the speed at which volatility is being applied to financial markets is increasing. In other words, there are a lot of V-shaped in a shorter period of time. Is that something you see?
Sorry, Ralph, I didn't catch.
Is that something you see, the volatility increase? There are more periods of volatility in shorter time periods.
Yes, indeed. And the crashes seem to be coming more frequently,
yes,
but I hope they're going to continue to be shorter. There's no guarantee on that, because you look at Japan, Japan's share market, its property market went very high in the late 80s. Share market peaked at 39,000. It crashed. And 32 years later, which is today, it's still only at 20-something thousand.
Yeah.
So, you know, if you'd invested on that highest day, you still wouldn't have got your money back 30-something years later. So there's no guarantee that a crash will bounce and come back up. But they do seem to be happening more and more often. We're going, but I think because markets are partly driven by algorithmic trading, so there's a lot of very fast trading going on, which is driven by computers. I think we're going to see more and more volatility.
Okay, Liz, I know you'll have some comments here. You've seen many market cycles.
I have indeed. And you know what? I think we've got to change our thinking about volatility. I love volatility, because it's volatility that allows you to make money. If you didn't have volatility, you'd have something dead flat and you'd make no return, really. So there is nothing wrong with volatility. And for a confident investor, it's a good thing. So long as you apply the same old, you know, what Martin calls, you know, his boring principles, I guess, of diversification and, you know, in time in the market. So, you know, if you do that, it's no issue. But yeah, I recall when I first set up my financial planning business, it was at the end of 1999. And in January 2000 was the start of the dot-com bursting. And we had, it wasn't a massive crash, but it was just a slow decline for 4 years in a row. Now, for me, as a brand new advisor, you know, setting up my business, you know, literally from the ground up, every client I signed up over that 4-year period, when it came to doing quarterly reports, I would have to say, well, I'm sorry, Mr. and Mrs. Jones, but your portfolio has made a negative return this quarter. I did that every quarter for 4 years. So you can imagine how soul-destroying that was for someone who was new to this field. And, you know, at times like that, you know, you can kind of start to question, you know, whether you've got what it takes. But, you know, I stuck it out. And, you know, the big learning from that is if you do hang on in there, it comes right, because within a few years, the market had not only recovered, but it had doubled in value. So, you know, and we've seen lots of these periods where, you know, you have volatility. And it's, as I say, it's not something to be afraid of. You just got to learn to live with it and take advantage of it, because when it drops, that's the time when you buy. That gives you an opportunity to buy in low and get the gains as they go ahead. And I think
the shorter term volatility is actually even better for that, as opposed to the slow burn kind of thing that we had in 2000, or what Martin was talking about earlier with the Japanese market. So periods of very, short volatility are, not so bad.
No,
They couldn't be good. Right.
Thank you both. Diversification, Martin, not boring at all, just important. Liz, use volatility to your own advantage.
Yeah.
Great. Here at Lifetime, we're trying to take worries away in retirement. It's not all about money in retirement. There's a very human aspect to removing worries. Diana, you might have some comments in that regard.
Well, I do, and I'm the doom and gloom person on this question, because while Liz and Martin have suggestions for you during volatility, if you have some money, we have to remember that during COVID, it's women that have suffered mostly through the COVID. So in the March and September quarters of 2020, last year, there were 31,000 people lost their jobs. 31,000. 22,000 of those people were women. Women lost their jobs in retail, accommodation and services. And some of them, of course, their jobs just disappeared. Others had to go home to look after the kids while they were out of school in lockdown. And it tended to be the women who took that burden. We also know that at that time, when people were trapped in houses and in lockdown, the domestic violence increased, and women, of course, bore the brunt of that. It rather disappointed me that the government talked about bloody shovel-ready projects,
yes,
when in fact it would have, from my point of view, been better if they had talked about projects that we need to have in this country that would have picked up some of those unemployed women. We also need to note that Maori women lost more than anyone else, 70% increase through this COVID in unemployment. Maori women, a 70% increase. So it's something to watch for. Of course, the people who were able to survive, we saw the economy increase. We were lucky that the economy didn't go down. We saw some people talked about the W kind of approach, but we really saw a K recovery. So people that had money did well and had jobs, and we didn't have the big crash that we were expecting. But unfortunately, there were others on the slippery slope going further down. So my concern about COVID and this particular crisis is that we will have even more separation of the haves and have-nots. And that's not good for the nation. So we've got to find ways around that.
The haves and have-nots, the whole issue of unemployment in New Zealand seems crazy that it's an all-time low. And that's such a sweeping statement, because in fact, the sectors of the economy that it's all-time high.
Absolutely.
Maori women and the hospitality sector shattered.
Yeah.
Completely, Diana, thank you. Why don't we try and take what we've learned and look forward a little? Let's call it the crystal ball session, for lack of a better word. As you know, marketplaces are effectively a stage of many different views and opinions, and it's the role of professional investors to sort through all of that and just deal with the facts, not the emotion of money. Not always easy to do, but that's what professional financial people do. To that end, we have a number with us today, so perhaps we can pose the question. For the next couple of years, is it caution? Is it an opportunity to invest? What is it? What do you see the next 2 years as being as a theme? Mark, can we start with you, please?
Yeah, I think the next couple of years will be difficult. I think there will be more volatility in the next couple of years than we've had for a while. But in the medium term or the long term, I'm actually very optimistic. I think there are a lot of things happening in the world which I think are excellent, and they are most excellent for people who are going to be investors, and particularly for those who are going to get some money offshore and invest in technology offshore. Because I was talking to somebody who knew a lot about technology a couple of months ago, and he was talking about everything that had happened in the last decade or so in terms of technology, and he said, but for the next decade you ain't seen nothing yet. So we've got things like, biotechnology in particular, medical devices. We're getting, I don't know whether you heard the thing, I think it was on National Radio or the BBC, I can't remember which, but, somebody just had their prostate cancer operation with effectively a robot, a big arm thing doing it. Things like automation and robotics generally. And of course, the really big one is clean tech. So this is the global warming thing, and it will be technology that will solve that problem more than just about anything else. Now, this is huge opportunities for the world, but also huge opportunities for investors. And any time when you get dislocation and sustained periods of innovation, you get disruption, and you therefore get opportunity. And I'm therefore very optimistic. Now, I'm not going to sit back and say, what is the next Amazon? Because I'm never sitting here in the spare bedroom, which is now my office, here in Sumner, Christchurch. I'm never going to be able to pick the one company that's going to come through. Amazon's been listed for 24 years. It listed at $18. It's had 3 share splits. So each share had a value of $1.50 on listing 24 years ago. It's now $3,400. That would have given you, if you own Amazon all through that, 37% per annum each year for 24 years. That's not bad fishing. And so we're all sort of looking for that next one, but Amazon's just an example of disruption. Amazon came in and disrupted the market. Now it's growing and growing and growing, and it's probably going to continue to grow. The only way to play things like that are really through funds, so that you own a lot of investments, let's say, in the medical devices area, a lot of investments in the biotechnology area, or a lot of investments in clean tech or automation and robotics. It's these kinds of things that are really going to give the opportunities. And I'm very optimistic going out, say, 10 years.
Thank you, Martin. So Liz, we've got Martin, who's sensibly optimistic. Where does Liz sit?
Well, look, I think the world economy is in good shape, and it's going to underpin some really good growth in the share market. Our prospects are good. And being an economist, I think, one of the things I've always taken note of is that when you get big shifts in an economy, things gradually resolve themselves over a period of time. So because you have innovation and adaptation to change, and eventually you come back to a new equilibrium, or what is sometimes called a new normal, and maybe we're not there yet, but there is nothing wrong with change, even if it's a negative, what seems a negative change at the time, because what that does, it stimulates innovation and adaptation, and that's what creates the opportunities. So again, I don't think we need to be afraid of that. If there's ever an adverse event, the economy finds some way to adapt to that and to come out of it into a new normal kind of situation. So, I'm always the optimist. I just believe that as human beings, we are very resilient. Our economies are quite resilient. And yes, it might take a bit of time to work through, but we do get there in the end. So, change is not bad. If you didn't have change, you wouldn't, or even adverse events, you wouldn't have an opportunity to regrow. And I always think economies, they go through stages a bit like, I don't know how many, no doubt some of you are gardeners, and you go, when you're growing a garden, you go through stages of pruning out, things die off, and you get new growth. Well, it's exactly the same with an economy or even a share market. So without that sort of cleansing process, you don't have a healthy garden, if you like. So every now and then an economy needs to go through a bit of a cleansing, getting rid of those companies that are not performing quite so well, and freeing up resources for companies that are more innovative. So it's just kind of like a natural cycle, if you like, a natural evolution. So I think, disruption has that kind of positive effect.
Thank you, Liz. As mentioned earlier, at Lifetime, we're trying to take the worries away. So that involves for our customers understanding their financial needs and their retirement income needs, but also some balance between money and their lives. To that end, we've heard Martin and Liz talk about optimism, disruption, encouraging times ahead, which things is exciting, really exciting. Diana, on the social side, if we can just come back to the haves and have-nots, disruption in particular is a pretty exciting word. There are some schools of thought that suggest disruption disrupts jobs, and it means innovation and perhaps technology replaces jobs. What do you think, Diana?
Well, the haves and have-nots are a big issue. We should have another whole seminar on that. That's a big issue. I was going to pick up on Liz's point about resilience and at the individual level. And I think that one of the things that happens through these crises is that, as Liz has said, that the market itself as an ecosystem almost works itself through. But what's going on for the individuals, and I'd like to talk about resilience of individuals for a minute. So recently I heard of a woman who had been in a marriage for a long time, and the marriage had broken up. And when it broke up, the family discovered that their mother, their aunt, did not even know where any of their money was. She had no idea about the funds, the money that belonged to the couple. So she was starting from, at an older age, she's starting from ground to even learn about finances and how to manage her money. And when I was listening to this, of course, I was thinking, this is a perfect example where Lifetime can help. So this woman is not part of the have-nots. She could easily be quite quickly if somebody doesn't help her, because she didn't know how to manage her money. Family members leapt in and helped, which is a slight worry as well. And we know that from all the research shows that we mostly get our financial capability or financial knowledge and literacy from family members, which when I think about my family gives me the shudders. So what I'm thinking is this: there's a good place in this almost lack of resilience for a Lifetime to come in, support. We've got, a financial advisor who can work through the questions with her and her family and take away that worry that the family have and that she has, and any other money she has left over can be invested by other family members if so be it. But it does take away all of the worry about daily ever being ripped off or losing all her money on dicey investments because she's got money that's coming in and paying the bills and so on. So that was one thing. I think she's a perfect candidate for Lifetime. So we have resilience within the market, and we now need resilience within families.
Thank you, Diana. Clear. Martin, Diana and Liz are all very active in the community in providing services to the community, either through financial education or financial commentary, or as Diana said, I think some charity work. Can we just do a round the table and just hear about some of your latest innovations and helping other people? Perhaps Liz.
Okay, well, I've been busy for the last year since I sold my financial planning business. I was in July last year, and I've been developing a resource for people who are about to retire or newly retired. I have a website, enrichretirement.com, and I've spent the last year building that up. The idea of it is it is a subscription service, although there's a lot of free information on there. I just am charging, we'll be charging a small fee to cover the costs of running the website. But the idea is to have all the information people need in one place to plan their retirement. And I don't just mean money stuff. We're covering all the different aspects of retirement. So, what to do with your life, how to stay fit and healthy, eat the right foods, exercise, as well as planning doing your investment strategy. So that's enrichretirement.com. You're welcome to join my mailing list. And also I have a special offer for Lifetime listeners. And that is, if you go to my website, enrichretirement.com/lifetime, you'll be able to download a free ebook from there, The 6 Secrets of Successful Investing. So you're welcome to go on there, click on the link to download that ebook, and also sign up for my newsletter. There's lots of free information on there. There's my regular blog that I do. There's links to all sorts of interesting websites, some video interviews that I'll be doing, or have somehow I've done, or I'll be doing more. So yeah, go and take a peek. That's my big project for the year.
Great. Take a peek with Liz. Fantastic. Martin, I think you've got a special mission underway.
Yeah, I have, and it's well, I suppose it's just my continuation of trying to figure out what I'm going to do when I grow up. Because I've changed my occupation a bit over the last year or so. I'm no longer giving financial advice, but what I have done in the last 12 months is write my 23rd book. I haven't written a book for 7 or 8 years, and I had forgotten just how much hard work you've got to do to come up with a book, 60-odd thousand words. It's a book on retirement. I've called it Cracking Open the Nest Egg. So it's really aimed at people who are going to retire soon or who have retired and are trying to work out how they will maximise their income. And one of the key things, a couple of key things on that is how they're going to invest, but also what is the drawdown rate. And Ralph, this will be something pretty close to your heart, because you personally are extremely expert on this whole thing. So it's trying to sort out, have a portfolio of investments and how much can you draw from that? What can your ongoing income be? And I actually start the book with a story, which is kind of true. So a lot of the details are changed to protect those who need protected. But a farming couple who were clients of mine sold the farm. And they hit the auction and got rid of everything like that. And the next morning they woke up, went to their computers, and went to the bank site. There on the bank site was a balance in their check account for $7.477655 million. And you'd think that would be an occasion for great joy. Let's have a bottle of champagne for breakfast. But actually it scared the living daylights out of them. And this whole thing of a major developmental stage being retirement, happening at a time when we're not quite as good for life, and they might have had years of practicing dagging sheep, changing the fences, sorting out the feedlots and so forth. But what they've never done was invest. And they just could not see a way through that, even with that amount of money. Now that's $7.5 million, and they weren't joyful, they were terrified. Their whole life's work came down to some flickering numbers on screen. Is this stuff real? Can I please just go back, buy the farm back and go back to feeding out or something? So that's what this book is about, and that comes out in April.
Right. It'd be easy to access the book. Is it an ebook? Will it be available in shop?
No, it'll be hard copy and an ebook. I think it's been published by Upstart Press. They look after all that sales sort of thing, but I guess you'll let me talk about it on one of these when it comes out. I'm sure, Ralph.
That's April next year, right?
April of next year.
Thanks, Martin. When you were talking before about Sir Michael Cullen, how hard he works, I instantly thought of Diana. Completely restless on so many endeavours, and one of those is charities. Diana, can some of you work with us?
I can, Ralph. I'm finishing as the chair of Good Shepherd, and there's lots to talk about Good Shepherd. The focus is on New Zealand disadvantaged girls and women. So one of the big areas we've been involved with is microfinance. Loans for people who would otherwise go into loan sharks or payday lenders or whatever you like to call them. So there's a no interest loan and a low interest loan offered by Good Shepherd. supported by the BNZ and working with community groups, Salvation Army, Presbyterian Support, and others on the ground who work with the people. So it's a very positive process, and I think we've saved people 5 million this last year in what would have been fees and interest. So that's been great. The other part of it, though, is we look at financial inclusion, but we also look at social inclusion. And one of the things that comes together is an unfortunate occurrence in our society, and that's what we call economic harm. Some people call it economic abuse, but that's because they're focusing on the perpetrator. We are focusing on the victim and the harm that's done to people in intimate relationships we're focusing on at the moment. So we had a very successful webinar recently, and just about every media in the country picked it up because it's a horrendously hidden process that goes on in relationships. It's not just about relationships of poor people, it's relationships right through society. Mm-hmm. We know of incredibly wealthy women who've had all of their funds stopped. The perpetrator has found all sorts of ways of using their power to stop them getting money, and it lasts for a long time, or to build up debt in the woman's name, which it takes a long, long time to unravel. So the issue of economic harm is being unpicked. So that's one area, and it was so we've got the positive thing of the low interest and no interest loans, and that's going well, and then we've got the new work in economic harm. So I'm sad to be leaving Good Shepherd, but I've been there since 2014, so it's someone else's turn. I'm also on the Kibosh board, which is the food rescue organisation in the Wellington region, and we've opened a new centre or place up in Kapiti, and helping rescue food from supermarkets and other places, the markets and places, to make sure it's redistributed to people in need. So that's a very good thing to be involved with. And lastly, I annually fundraise for, and if anybody wants to help me, I'm glad about that, especially those people in the room. We fundraise to help former refugee women get their driver's license. And what happens when a refugee family arrives, and it's not only refugees, but what happens is the man often gets a job and gets a driver's license and gets on with it. The children are like sponges, learn English quickly, get their driver's license at a young age, and the woman in the past has been left at home. Her English doesn't improve because of that, and we all know that mothers in New Zealand need to drive their children all over the town or all over the area for sports and whatever. So helping a woman get her driver's license, it gets her into the New Zealand society quickly and gives her freedoms and her family freedoms. So that's a very good project I'm involved with annually.
Diana, you're anything but retired. What you are, though, is a tremendous, almost an ambassador, an example of what the retired community can do for society. It's tremendous. Might just check in now with our listeners. Chelsea, are there any questions on the chat function?
No,
but
I'm just speaking off camera and going to say, Liz, do you want to repeat the link to get your ebook? And then once you've done that, I might say, Diana, do you want to mention where that economic harm might be found?
Sure. So the link to download my ebook is enrichretirement.com/lifetime. I think it will be available, is it on the chat function of the webinar at all?
I'll put the link in the description down below.
Right, okay. So you're welcome to go in and download that ebook and join up to my newsletter list. And just have a look around and see what's on the website. Anyway, there's more to come next year when it's properly launched. From me. And
if anybody's interested in following up the economic harm work, there was a piece of research done in 2018, which is on the Good Shepherd New Zealand website. And also, I think you'll find the webinar there as well. If you search through Stuff and Radio New Zealand and others, you'll pick up articles. Rob Stock did an article on it, quite a few financial commentators have done articles on it as well. Make sure when you're looking at the Good Shepherd website that you look at Good Shepherd New Zealand, because there is one called Good Shepherd ANZ, which is mostly Australian. So Good Shepherd NZ, and you'll find the stuff on the information about the economic harm research and what we're doing.
Terrific. Chelsea, who's off camera? Chelsea, no other questions?
No.
Great, okay. I think it's time for a wrap. What do you think, team?
Yeah.
Martin, thank you very much, sir. Liz, thank you very much. Diana, as you know, the chair at Lifetime Retirement Income. Thank you, Diana. And to all our listeners, thank you very much indeed. We love doing these webinars. Great chance to share. On behalf of all of the team at Lifetime Retirement Income, we wish you a very, very good Christmas. We're back again in January. January can, or the sort of Christmas period can be a time for reflection. We're forever updating our free calculators on the website and information and news. If you feel like we thought about your retirement income for 2023, please do use the calculators. They might just help you.
And I'd like to thank Ralph, but also Liz, Martin and Chelsea for these webinars through the year. They've been fantastic, and I've heard lots of people, friends, and watched them and learned from them. So fantastic. Thank you very much. And thank you for today's webinar. Before I go though, I always want to say, if you haven't invested in Lifetime, why are you waiting? Please have a look. We love having people invest in Lifetime, and we see it working for so many people. Also, you are our best ambassadors, and please would you talk to your families, talk to your friends. New Zealanders are hopeless at talking about money, but you can help them by at least showing them the Lifetime website or showing them the material you have. It helps us a lot because, as I say, we're not very good at talking about money to each other. And if we can do that, that's a nice way to spread this good news. So look forward to seeing some of you investing and some of you sharing it with others. And do have a good break, and we'll be back selling Lifetime in the new year.
Merry Christmas, everybody.
Merry Christmas.
Thank you very much.
Merry Christmas.